Number 6, what is a market index? So an index is essentially a way to track a collective value of something in the market. So that something could be the collective value of the real estate sector in the market, the collective value of small caps stocks in the market, the collective value of the biggest industrials companies in the market, aka the Dow Jones Industrial Index. The S&P 500 index tracks the top 500 most valuable companies in the US. So there are different companies that sort of create these indexes, like Standard & Poor's is one, the S&P 500. And we kind of measure the overall health, of the market, maybe even the economy, you might say, to some degree, by looking at the top 500 companies in the country and putting a value on them at any given time and watching the value of these companies collectively go up or down. That becomes an indicator of how the market is doing, right? So we have the Russell 2000 index, we have the Dow Jones Industrial Index, we have the S&P 500 index, but we have S&P, the Standard & Poor's does indexes on sectors of the market, like I said, real estate, utilities, whatever. You might have indexes for value stocks. So there's a lot of different companies out there that create these indexes. And then oftentimes what happens is these days we would see that other companies have created an exchange traded fund that just tracks the index. So, and you hear this a lot. You just go, simple way to invest. Go buy S&P 500 ETF, so a Standard & Poor's based investment pool that trades as an exchange traded fund. So you get exposure to the top 500 companies. There's very low cost on the ETF, index ETF, because it's just looking at the index and doing what it does and mirroring that. So you don't need an expensive fund manager to like buy and sell stocks all day. You just stay in balance with the index that you're tracking. So that's what an index is.